Okay, so let's get back into the conversation with Andrew Nevin, partner and chief economist at PwC Nigeria. Thank you very much, Andrew, for sticking by with us in the program live from our studios at the Nigerian Stock Exchange. Andrew, let's expand this a little bit and bring the diaspora into the conversation. In recent times, we've seen a very increasing number of Nigerians voting or electing out of the country, whether they head into Canada or to the US or other economic climes where they think their fortunes could be better showcased and have a better life. So aside those who are crossing the Mediterranean using those dinghies to cross the Mediterranean, we're talking about professionals, medical doctors, accountants, and others who are moving on to Canada and elsewhere. Why do you think this is happening? Do you think we can leverage this at some point?
Well, I think let's start with why it's happening. I mean, I think in many cases, Nigeria's not giving enough opportunities for a professional to use their qualifications, to use their abilities. And of course, from a financial viewpoint, what we pay after the devaluation is low. So people are making a decision, and people don't make it lightly. It's a big disruption for family. I've heard of many people in their late 30s, even early 40s, making the move. I can tell you when you move to Canada, you often have to drop down 2 or 3 rungs in the hierarchy to do that, and people are prepared to do it. So I think we should take it as a signal that we're not creating enough opportunities for our people. On the positive side, I mean, we've come out and said, look, the diaspora, in effect, is the only thing holding up the economy, because the FX flows, I think official FX flows were about 25 billion in 2018, which dwarfs what we get in FDI, it dwarfs what we get in foreign aid, and it's even bigger, not of our total oil sales, but of the total amount that goes from the NMPC to the all levels of government. So that's a positive. The other positive aspect of the diaspora is, we were talking a little earlier about reputation. When people work with professionals, Nigerian professionals, abroad, in the UK, in the US, it really helps our reputation, because for many people, it's the only real contact they have with Nigeria. They're just reading the media otherwise, and they say, hey, this is a very educated, erudite, talented professional, and that helps us. But I think it's going to be a real signal to us if we're making progress, if some of the diaspora start to come back, because many of them want to come back. They want to contribute. They're actually prepared to take risks. If things get a little bit better, they'll take those risks and come back. So I think the federal government should be measuring that. Now, we've just had the commission set up, so we moved from having a special advisor to the president, the fantastic Mrs. Dabiri. She's now become, I think, the CEO of the Diaspora Commission, so I think it's a signal that the federal government has recognized the criticality of it. And I'd like to see some policies come out where we both take care of the diaspora more, support them more, but also create ways that the diaspora can contribute to Nigeria. Many of them, they want to contribute. They're obviously sending remittances, in many cases for things like education, basic feeding, health care for their family and people they're close to. But there was a survey done by DFID here that said that basically people would like to see, you know, a chance to invest in Nigeria or invest in their particular state or region in a structured way. Because so can we structure some of those things so we can get the diaspora to contribute more, and not just their money, also what they've learned, and get more of them to come back and contribute. So I think those things are all on the table, but I think what the diaspora does is a real test of whether Nigeria is making progress or not. And if we continue to hemorrhage this many doctors, this many other professionals, it's difficult to see, you know, we have enough human capital to do what we need here.
Yes, Andrew, diaspora remittances, $20–25 billion we go to the Eurobond market for $2.5 billion borrowing, whereas we have Nigerians abroad who can pull this money together within a day, technically speaking, because if you divide $25 billion over a 12 calendar months, that comes roughly to close to about $2 billion every month. So which means that Nigerians in diaspora could pull $2 billion together, could just lend that money to the government and say, hey, we're putting this into diaspora infrastructure fund. So if you have some advice for the president, the vice president, and Abike Dabiri, who is in charge of the full-time CEO now with the Diaspora Commission, do you think we should set up something like a fund, perhaps an infrastructure fund, and say, hey, if you're sending $1,000 home per week, per month. Can you cut out in two, send $500 to the family, your families and friends here, and the other 500 you can put that in a dedicated fund that they will be used to develop the critical infrastructure and other things we need.
Well, I think my advice here was, yeah, we should be setting up these kind of vehicles, but I think the diaspora expects to be set up with transparency, with good governance, which means, to be very candid on this show, I'm not sure that if it was purely driven by the federal government that the diaspora would necessarily sign up for it. I think what they want to see is the way the private sector is involved, the way actors that are used to managing money are involved. I think what the diaspora would also like to see is that the funds may be targeted to certain states or regions, as I said. So I talked a little bit before about Edo State, Governor Obaseki. I mean, certainly if there was a fund that was focused on Edo, it would attract a certain group of the diaspora. If there was a fund focused on Imo. So I think the federal government and the commission needs to be a little bit creative in thinking about how to engage the diaspora. They're willing to support Nigeria, they're willing to invest, but they want a return and they want to have transparency and they want to know their money is put to good use. But of course, we've got all sorts of technologies to do that. I mean, even within this country, groups like Budget IT, Track NG are looking at government projects and telling us whether they're going on. People want that level of transparency. So yeah, I think they should be heading in that direction. But a purely federal government-driven initiative, I would worry, would not be successful right now.
Andrew, the world is changing by the minute. And you can see the whole geopolitical shifts. Iran and Russia going to bed together over some strategic economic issues. This is Russia running the gas pipeline through to Europe. President Trump in the U.S. is not happy about that. There are new strategic alliances. And some folks says, look, we're going to see a new world emerge after all these trade wars. So when you sit back and look at Nigeria here as the giant of Africa here in terms of demography and its potentials, what do you think we should be doing and positioning for this new world that would definitely emerge?
Well, to begin with, this new world, I mean, in a way, is a creation of President Trump. I mean, he's alienated his allies. He's tried to impose U.S. will around the world. So, in my view, what's happening is you're driving people who may traditionally be enemies together. So particularly China and Russia are creating a bit of a block, and then they're going to draw in Iran, as you say. Turkey's going to have to make a choice. India has traditionally been an ally of Russia, traditionally an enemy of China. How are they going to play out? The U.S. put new tariffs on India. India's just retaliated. So in a sense, the U.S. is creating the world versus the U.S. And unfortunately, at the end of the Second World War, the U.S. had 50% of the world's production and could enforce its will. Today, that's no longer true, and I think the world could move on without the U.S., but we would be poorer for it. Now, I think in terms of our strategy as Africans, I think that we should be setting ourselves up, not to use an old term like the non-aligned movement, but we need to deal with the whole world. We're going to have over 2 billion people, bigger than China, bigger than India. So we are the demographic pole, weight in the world. And we have to have a way to relate to Europe, to relate to India, to relate to China that benefits Africans. I don't think, sitting here right now, that we should be necessarily trying to choose sides, but I think we can chart that course.
Yes, we can take sides, as it were, or choose on which side to become. So what should we be doing?
Well, I think that we should be, first off, I think the AFCFTA is critical, the free trade agreement, because, and I think people don't fully appreciate it, the reason it's so important is that we then negotiate as a bloc, in the same way the EU negotiates as a bloc. So if you want to bring things to Africa, you know, we've set the rules for bringing that. We've set the tariffs from India. We've set the tariffs from China. So let's start with the AFCTFA. We're much stronger together than we are apart. I think then secondly, I mean, from a security situation, we're all very closely aligned to the United States and to the UK and to the EU in terms of Sahel, and that probably makes sense. But from an economic perspective, I think we need to make it clear we have good economic relations with all the other blocs in the world, and we're not going to necessarily try to choose sides. But I think it's going to be a little bit difficult. I mean, the next few years with this issue with Huawei, and for Africa this is critical, because if we're breaking into two poles of technology, where does Africa sit on that? I mean, many of us here in Africa buy Huawei phones. Huawei supplies a lot of the telecoms equipment too. If the United States goes forward with sanctioning Huawei, in fact, we may be forced to make a choice, and I think that's going to be a difficult choice. But I think we need to delay that as long as possible and make it clear that we are friends with all parts, all parts of the world. And in effect, maybe non-aligned is the right word. But we'll see how long this strategy of the U.S. goes on, because they've alienated, as I said, their traditional allies, created real problems. I mean, with Germany right now for the Russia pipeline, and of course, Trump may not be reelected. So let's wait and see.
Mm-hmm. Nigeria needs very critical investments. It's all agreed across the table, Andrew. So what do you think should be guiding policies and actions around attracting both foreign investments and domestic investments? On the first part, direct investments that had been a little bit sluggish in a couple of years back.
Mm. Well, if I had to put this in one word, I would say simplification. I mean, obviously, PEMEC has worked very hard to improve the ease of doing business, and Dr. Jamoke and Minister Anelma and the Vice President, of course, and I think they've made great progress. But I think what's hampered them is there continues to be too much complexity. So if I understand right, we have 800 ministries, departments, parastatals. So that's too many, and companies have to deal with too many of them. So they trying to create a single window, companies dealing with up to 30 agencies, they shouldn't have to deal with 30 agencies. So I'd like to see the federal government really think about simplification and how does it make it easier just to get things done, because that's what we need. And if they focused on that and we had some kind of restructuring of the way the federal government operated in terms of all of these different parastatals, which were really created not to improve the economy, were created for employment reasons, for reasons of equity across the regions, but they're no longer fit for purpose. So I think the next stage requires that we need to look at. And of course there was, I think, an inquiry in 2014 around the large number of parastatals, because every time you create a parastatal, it creates new rules for the industry, new fees for the industry, and it makes it very difficult to grow the private sector. And as you know, PwC has said for years we need the private sector to grow at least 10 to 15 times over the next 10 to 15 years for us to be prosperous here. So simplification is what I would like to see, and let the states get on with it. As I said, I mean, I've pointed out a few states that are doing great things. I think lots of other governors I've heard from various states are starting to try to attract investors, and we need to create the room for them to do that, and the federal government to encourage that. But they can only do that if we simplify the way business is done in Nigeria.
Okay. One quick issue here. You're an economist, so and economists often are divided sometimes about what type of economic theory and practices we should have. So I'm going to ask you whether we should be neo-Keynesian or neoclassical in terms of how we go. It should be the state, it should be the private sector. Mr. President says in his Democracy Day speech that there'll be a better handshake with the private sector. Mr. Vice President also made the same statement, corroborated Mr. President yesterday in Lagos at an event, says there'll be a better partnership with the private sector. So how do you think we should go? If you look at the last 4 years of President Buhari's administration, seeming to put the state, officially the government, at the center of the social investment, critical infrastructure, driving it from using the government pulse, using multilateral, bilateral, Eurobond, global debt market offerings to fund it. Do you think it's time to change tack here for the next 4 years?
Well, let me start by saying I'm not really proud of the economics profession. I mean, I was trained as an economist. I worked in the private sector, not as an economist, for many years. And then when I came back from China to the UK, the economists did nothing to help us avert the great financial crisis in 2008, 2009. So I think the profession has a lot to answer for, has not reformed sufficiently. I mean, our development needs to be kind of African development. So I don't want to be hung up on kind of classical economic or neo-Keynesian or neoclassical theories because we've let themselves down. And I have to be very honest, I'm not a huge fan of the private sector. I've been in it for 32 years. I'm aware of all the things that can happen in terms of monopolies and abuse of consumers. The problem is that we don't have an alternative. I mean, the private sector is the only way for us to be more prosperous. And particularly in this country where the amount of resources that the government has to invest is so small, and they need to husband it very carefully and focus on a few infrastructure things. The only way we're going to build out our infrastructure is probably 90 to 95% private sector funding. And of course, once you say you need private sector funding, you need to attract that private sector funding. It's a voluntary decision by the private sector. Now, the world has lots of capital. We have negative interest rates all over Europe. In Germany, for example, we have very low interest rates around the world, so they want a better return. They would be prepared to come here if we set up the conditions for it, to fund out ports, to fund out railways, if they felt they were getting a return. So I think the federal government needs to come to the conclusion only a much larger private sector is going to work. Only the private sector capital is sufficient to move Nigeria forward. So then what's the consequence? What are the policies that are going to make the private sector come? And as I said, I'm aware of all of the problems with the private sector, but we have no alternative. If we don't have a much bigger private sector, Nigeria is going to remain poor. And we're all aware of the numbers around absolute poverty in Nigeria. We're all aware about the numbers of youth unemployment, so we need to unlock the private sector. But as I said before, it has to happen in many cases at a state-by-state level. So individual governors have to have the frameworks, but they also need to be able to convince investors that they're going to be a good place to invest. And one of the biggest difficulties we're having in Nigeria is if an individual governor comes in maybe in his first or second year, he can attract investment, but then people are concerned that the next government will reverse policies, and that's a real issue for Nigeria, and I think something we should be debating.
Andrew Nevin, partner and chief economist at PwC Nigeria, thank you very much for having this very robust conversation with us this Wednesday morning. Thank you very much. Do have a great day. Enjoy the rest of your week. Okay, you've got a story in this morning. Moody's Investor Services, one of the world's top 3 rating agencies, says it's keeping a stable outlook on Nigeria's banking sector and saying that the industry remains resilient, giving you a very quick snapshot of what it says. In summary, Moody says Nigeria's economic growth will be modest. Real GDP, according to Moody's, Nigeria's real GDP will expand 2.3% this year and 2.8% in 2020, up from 1.9% last year, but says this was well below the level required to improve Nigeria's living standards. So Nigeria's GDP will improve this year and next year, but that is not enough to lift Nigeria's living standards. That speaks to lifting people out of poverty. For the banking sector, Moody says the loan quality pressure will ease for the banks, but banks' main weakness remain non-performing loans. Meantime, capital buffers, according to the report, about 8 o'clock in this morning, capital buffers for the banks will remain stable and expect that to continue. Profitability by Nigerian banks will, however, be strained because banks' revenue will be strained by subdued loan growth because of cost pressure, IT investments, AMCON levy 2, and higher staff costs. So if you're looking at bank profitability, if you invest in banking shares in Nigeria, you need to keep this in mind. Funding and liquidity, according to Moody's, will remain stable, underpinned by solid deposit bases of the banks, including funding and liquidity profiles, which Moody says will remain very stable as well. Government support for the largest banks in Nigeria will remain high. That's the outlook from Moody's. We'll go to the marketplace after the break. Just in 2.